All right, everyone. Thank you so much for joining us for our next edition of our franchise sales and marketing trends session. And if you're just loading in, I do apologize here. Was running a few minutes behind from a previous appointment, and oh, the joys of live events. They don't. When that's just how it goes. So thank you for your patience here. If you are new to us, for this monthly session we've been running for close to 4 years now, we're coming up on current franchise sales and marketing trends, where we like to talk through economic conditions and from a macro standpoint first, and then start drilling down macro kind of and into some more micro things focused on small business and franchising to see how this is impacting or maybe impacting your franchise sales and marketing efforts, and at the very least how you might be able to adjust some of the things you're doing with your messaging, with your content, with your information on your franchise sales efforts and marketing efforts. So my name is Tom DuFore. I'm the founder and CEO of Big Sky Franchise Team, and I am going to share my screen, and we're going to start jumping into this for a quick review of this. If you have questions as they start coming up, if you have questions, please just type that into the chat. Raise your hand. I can unmute you. We typically have a small group of live attendees here, so please feel free to ask that. But without further ado, we're going to go ahead and jump right into this. So the first screen I always like to share every month is the Institute for Supply Management produces 3 monthly reports. The first is their manufacturing purchasing managers index report. This is one of my favorite macroeconomic reports because it's a leading indicator to show what are the manufacturing purchasing managers buying. Are they buying stuff anticipating an increase in orders, a decrease in orders? Because this tends to be a leading indicator for us and in terms of where things are going. So this report came out for March. This is for the month of March. It was released in April. It says the U.S. manufacturing sector expanded in March as a manufacturing PMI registered 50.3%, up 2.5 percentage points compared to February's reading of 47.8%. This is first instance of expansion in 16 months. Okay, so I think it's noteworthy to show that this is the first time that the manufacturing PMI has been above 50% in well over a year. So all of 2023, it was below. Here we are coming up, and you can, if you're watching live, you can see this. I'll zoom in a little bit on that so you can see those numbers, but you can see that number there. It's exciting to see that coming up. And to me, you can see a little trend starting there at the fourth quarter of 2023. We start seeing this trend up. It dipped down into February, popped back up into March. So look, it looks like we're starting to see this trend upwards. But like I've said to most, for most of these sessions for the last over a year now, that it's been hovering right around this 50% marker for quite a while. So it's great to see it trending up, and we're still kind of in about that same spot. So let's see if this trend continues over the course of the next few months into the second quarter here. Okay, next report is the Institute for Supply Management. Their Purchasing Managers Index for the services industry. I'll zoom in a little for us. And as you can see, it says in March, the services PMI registered 51.4%, a 1.2 percentage point decrease compared to the February reading of 52.6%. A reading above 50 indicates a services sector economy is generally expanding, and below 50% indicates it's generally contracting. So you can see here, if you just kind of look, you can almost kind of draw a little bit of a line. If you see my cursor starting back in 2022, you kind of just see this slow decline in over the last roughly, 2 years and 3 months or so, 2 years and 4 months. But it's still above 50%. So it's still in the growth territory, just not as fast of growth. And for me, again, this number's right around that 50% number, just like it was in the manufacturing side. An indicator of kind of what the sense that I've had for the economy the last 18 months, couple years, where it's just kind of been close. It's just kind of been bobbing and up and around that 50% number. And then our next chart is for their third and most recent report that the Institute for Supply Management has released. This is the hospital PMI, and it says it's at 52.3%. And it says the hospital, in the second paragraph, it says the hospital PMI registered 52.3% in March, a 4.3 percentage point decrease from the February reading of 56.6%, indicating a seventh consecutive month of growth after a contraction in August. So you can see here, we see a big upswing kind of starting last fall, and then a big downswing here coming into the spring. And I have to maybe imagine that there's some indication, some impact there from seasonal illnesses that occurred, the flu, colds, and things that are going on in the fall into the winter months. But nonetheless, it's still in a growth point of view there. So just things for us to point out. Now, let's go ahead and jump into the U.S. unemployment rate. So the unemployment rate, and this is from tradingeconomics.com, from the United States unemployment rate, and it says unemployment rate in the United States dipped to 3.8% in March of 2024 from the previous month's two-year high of 3.9%, and surprising market expectations, which had forecasted the rate to remain unchanged. So again, it dipped down. They thought it was going to drop or stay the same, but it dipped a little bit, okay? The number of unemployed individuals decreased by 29,000 to 6.4 million, while employment levels saw a significant surge, rising by 498,000 to reach 161.5 million. Additionally, the labor force participation rate increased to 62.7% from a near one-year low of 62.5% in the preceding periods, and the employment population ratio climbed to 60.3% from 60.1%. So I'm going to scroll down just a little bit because this chart, I think, helps plot things out where you can visually see if this is a one-year bar graph, I'll move this to a five-year bar graph so you can kind of see the trend here. Back in April of 2020, you can see that this is back when COVID hit 4 years ago, and now you can see this starting with the unemployment rate hovering around for almost 2 years now, 3.5, 3.6, 3.7, 3.8, right in that zone, 3.5 to 4%. Okay, next up is we have the U.S. inflation rate. And it says, this is from tradingeconomics.com about the U.S. inflation rate. And it says, annual inflation rate in the U.S. accelerated for a second straight month to 3.5% in March of 2024, the highest since September, compared to 3.2% in February and forecasts of 3.4%. And so what this means, I'm going to scroll down and look at the chart here, and I'm going to map this out for a 5-year rate and zoom out just a little bit so we can take a look at that. There we go. 2020, 2021, you see this big climb, this big surge, and then it starts coming down in 2022. But we're still seeing that inflation is still remaining high. I'm going to go to a 10-year for us to help put things in perspective to show where the inflation is today at 3.5%, even 3.2%. And we can see back in 2015, 2016, 2017, it's at or around 2%, 2.5%, all the way down to 0%, 0.5% inflation rate, which is, overall consistent. So we're seeing that 3.5% rate. What does that mean? Well, to me, it's indicating that it's unlikely that the Federal Reserve is going to change rates anytime soon. So that means that it's unlikely for any prospective franchisee that's maybe on the fence of moving forward or saying, well, maybe I'm going to wait for the Fed to reduce rates so I can get a better interest rate and so on. It's likely, based off of this data for the inflation stuff, I think it's unlikely to change, in my opinion, based off of this. So knowing that, these are conversations you may want to have with prospective franchisees or be sharing that, it's unlikely to change. And if it changes in any direction, it might continue to creep up just to really make sure that inflation is being tempered and levied there. They want to try to keep that as under control as possible for pricing. So if a franchisee's on the fence and they need a loan or they want to get a loan, it might really be now is the better time to have done it or to be doing this so that they can be getting the best rates possible. Okay. Next, we're going to take a look at, this is from the University of Michigan. They have their surveys of consumers, and I'm just going to pull up the index of consumer sentiment that I like to take a look at. This is for the last 10 years. Actually, I just had up the last 50 years. I like the last 50 years for a longer time period for us to see. And you can see we are really trending up. I'm going to zoom in, and this is, you can see in here 2024, we really are surging upward, big spike upward. It's all, down in 2023. It was all the way at the bottom here, and now it's popping up pretty quickly. Overall, it looks like a small little dip for last month, but overall, it's consumer sentiment is increasing. There's a clear trend that it's increasing. And so what does that mean for your franchise system? Well, to me, what that means is it should be a little bit easier for your franchisees to be getting customers and to be getting business. Customers should be feeling a little more confident about spending about spending just in general. So if you're in food service, coming out and spending, maybe coming out a little more frequently, or increasing the average ticket, or new customers returning, or old customers returning back, and other services business looking to people feeling more confident about making spending decisions. So just something for you to share with your franchisees or prospective franchisees to show how things are actually improving, and for the consumer sentiment. Okay, next up is the formation of this from the U.S. Census Bureau. This is the business formation statistics. This came out April 11th. And this is for March. And what I like to show is it last month in March, 435,000 and change new business applications were filed across the country. Okay. And what I like to point out here, if you can see on this chart, this is one of my favorite charts to show, is that if you're in franchise sales, marketing, et cetera, new business startup is in the air and has been really since COVID hit. And you can see that impact. It dipped down in 2020. You can see before that early 2020 marker, for 2019, 2018, the number of new business startups was right around that 300,000 marker, with a slow, steady rise back in 2011 from about 200,000 up to about 300,000 new monthly business startups. After COVID hit, a dip, a big spike, it's kind of this big up and down, up and down. And now here we have, it's consistently been above 400,000, and now it's trending to stay consistently closer to almost 450,000 new business startups per month. What does that mean? Well, to me, it means if you're in franchise sales, franchise marketing, you need to assume that your franchisee is starting a business. You have to assume that it's in the air. New businesses are getting formed, they're getting started, and that the idea of business ownership is very important. So reminding the franchise candidate, if they're on the fence or unsure, reminding them about why they're looking to do this, probably to be their own boss and take control of their own destiny, and to a certain effect. I would be reminding them, if I'm in your shoes, I'd be reminding them about that, and how your franchise and your franchise business model allows them to create that lifestyle that they're looking to create for themselves. So I think those are important things to be talking about, and just as a reminder on that franchise sales side. Okay. Next is we have a quarterly report from the U.S. Chamber of Commerce, is presented by MetLife and the U.S. Chamber of Commerce, and they put together a quarterly report. So it gives us the Q1 Small Business Index score, and Q1 Small Business Index shows us that for Q1 it was at 62.3, Q4 was 61.3, Q3 of 2023 was 69.2. So you can see from back in Q2 of 2020 at 39.5, the slow rise up here to the low 60s. We did have that bump in Q3 of 2023, but it's kind of been in the 60s here now for that's been since about Q4 of 2021. So for a couple years, coming up on 3 years. That it's been there. So relatively stable for the small business index score. And so to me, that's a positive thing showing what small business is looking at. Next is a quarterly report that I like from Vistage. If you're not familiar with Vistage, they're a mastermind and networking group for small to mid-sized businesses. And so here are the highlights from the Q1 Vistage report in their CEO confidence report. And it says overall the economy, 26% of CEOs said the economy recently improved, up from 20% in Q4. The future economy, 26% of CEOs expect the economy to improve in the year ahead, up from 21% in Q4. We have expected revenues. 60% of CEOs expect increased revenues in the year ahead, up from 59% in Q4. Profitability projections. 46% of CEOs expect increased profits in the year ahead. It's a marginal decline from 47% in Q4. Future investments. We have, we have 36% of CEOs expect to increase investments in the year ahead. And future employment, 51% of CEOs plan to expand their workforce in the next year. So about half of businesses. So to me, those are some data points that are worth noting that CEOs, just in general, if you're pursuing, for example, multi-unit operators or other business owners that might be buying in, or maybe your current franchisees that might be looking to add additional businesses and or additional franchises. Okay, so let's take a look at some. We'll go to franchiseinsights.com. We're going to go to franchiseinsights.com. They have some great reports. And this is the Small Business Startup Sentiment Index that was released April 2nd of this month. And there are some pieces that I like to highlight in here. So it says 84.5% of potential or budding startup entrepreneurs, 84.5% of them expect their startups to occur within the next 12 months. So I think that's that's worth noting here to show that. You can see 23.3%. I'll zoom in on this a little bit. It's looking to start next month, 24.3% in the next 2 to 3 months. So you can see 27.6% that are looking to start in the next, 47.6% are looking to start in the next 3 months. So almost half of the respondents said they're looking to start pretty quickly here. Okay, which factors will have the biggest impact in the next 6 months on your decision to start a business? 65% of the respondents said funding or access to credits, their big issue. 39.8% said the economic climate. 22% said the stock market. 13.6% political changes. 13.6% regulatory. 12.6% tax law changes, and 7.8% other. So far above and away, the biggest factor is funding or access to credit. And we talk to this often on our sessions, but having a plan or an option for your franchisees to buy into a franchise or to have some kind of funding, even if it's a third-party referral that you're just referring them to, that's available to provide lending support for your franchisees. These are important things to have. So there are lots of great franchise lenders out there. If you'd like and you're not sure where to start, reach out to me after this session. Send me an email, ping me a text, or message me. Be happy to send some organizations that we know have been around for a long time and can support you with that. And another idea, by the way, if you've sold a franchise recently and that franchisee got a loan, ask them which bank or lender they worked with. If they did a loan for your franchise, talk to that banker and see if they'd be open to establishing a working relationship with you. economic climate was number 2 at almost 40%. So almost 4 out of 10 people are concerned about it. Well, attending a session like this and referring to data points on here is a great way for you to help answer questions or concerns that franchisees have. Now, this is just data that's showing what's already occurred. It's obviously not predicting the future, but it can at least give you something to go on rather than, well, I think it's this. Well, why do you think that? Have some information and data points to check it out. Maybe it's not this. Maybe it's something in your specific industry. Maybe there's some industry specific data you can pull from an industry association or another session like this. But just some food for thought for you to talk about there. Okay, let's see. Age group here for folks that are looking to come in. About 20% of franchise or new startups are for the month of March were baby boomers. 45.3% were Gen Xers. 32.6% are millennials, and about 2% were Gen Z. So it just shows you the age breakdown of some of these budding entrepreneurs. Many of these folks that use these percentages, this percentage can be applied to your prospective franchisee data customer base as well. So be thinking, okay, almost half of the buyers that are coming through are going to be Gen Xers, right? That maybe that were born 1965 to 1980, and then you've got about a third are millennials born 1981 to 1996. And so you can see that's about 80% of all the buyers fall into those categories. And then the remaining about 20% are the baby boomers. So just some food for thought on that. And lastly, one I just like to show real quickly here is Boxwood Partners. They're a merger and acquisition advisory firm, and they have press releases. Well, I think it's interesting to note they have 3 deals they did in the month of April so far, and April's not even over. So I just think it's worth noting that deals are happening, and Boxwood does a lot of work in the franchise space. That's why I specifically pull them up and refer to their website. 3 deals in the last month is a big deal. And one in particular that I wanted to highlight and share is the merger and acquisition, the purchase of Tropical Smoothie Cafe that was just released here. I want to see if this comes up so I can get a press release out so I can show you. But Tropical Smoothie Cafe was just purchased a couple days ago. Let me see here. Okay, this is from Nation's Restaurant News. Let me just share my screen again. Okay, so Nation Restaurant News, I'll just share this because this is a big purchase, a big acquisition. So Blackstone to buy Tropical Smoothie Cafe in $2 billion deal. So it says Blackstone Inc., the New York City-based private equity company, has agreed to buy restaurant chain Tropical Smoothie Cafe for a reported $2 billion, including debt, with companies announced late Wednesday. So Wednesday of this week, this press release was from April 24th, which was 2 days ago. So anyway, just to show you deals are happening. And I find it really interesting, actually, in this article. It says, let's see, there was one point in here where it talked about, well, I can't find it anymore. Well, let's open this up to questions. Thank you all for joining us here today. We've got a few folks. Any questions you'd like to add, share, things maybe you're even seeing in franchise development, in franchise sales, franchise marketing, trends you're observing as a participant in this franchise community that you'd like to share? All right. I'm not seeing any questions come through. I'd like to thank you all for joining us today. This will be available on replay on our YouTube channel at Big Sky Franchise Team. Google, if you search for us on YouTube there, it will also be republished in our podcast called Franchise Your Business. It's the Franchise Your Business podcast. So if you'd like to watch a replay, and it will also be published up on our company blog at bigskyfranchiseteam.com. Thank you so much for joining me today. My name's Tom DuFore. I'm so grateful for your time, and we'll have this session updated next month to go through these trends as well. Thank you all. Have a great rest of the week and a great weekend.